Hey folks, Dan Frio here with your opening bell for January 29th, 2025. So it is Fed Day and everything's going to revolve around the Fed. Stock market's not going to move until the Fed reacts. The bond markets aren't going to move until the Fed acts. And mortgage rates aren't going to move until the Fed Reserve basically comes out and tells us what they're going to do and then gives us the guidance, how they're going to get through all these tariffs and unemployment and things like that. So in today's video, we're going to go over where mortgage rates are, where I expect them to be. Then we're going to go over right through here. Did you realize this is the first Fed meeting under the Trump administration? Remember last week, President Trump came out and said, I'm going to demand lower rates. So let's see if that's brought up in today's news. Next thing we have is right through here. Treasury yields fall as investors wait Federal Reserve decision. So I'll show you how the bond market's reacting right now. And then the CME FedWatch tool, it's basically telling us there is a 99.5% chance the Federal Reserve isn't going to do anything at this meeting. They're not going to cut at the next meeting. And then there's a 50-50 chance that they're going to cut at the May meeting. So let's get over to the headlines that we're seeing right through here. So the equity markets right now are basically flat, which we expected. The NASDAQ's down 100. Must be NVIDIA's sliding just a little bit today. Let's see what oil's doing, because oil is inflationary, or gives us at least the guidance of inflation. Okay, as oil prices come down, this is a big piece of the inflation equation. You're going to see inflation come down. And then another area that you can monitor is cryptocurrencies. Cryptocurrencies are also really sensitive to interest rates. So if you see Bitcoin rallying, that must be there's good news on the inflation front. And if you see this deteriorating, that means there's not very good news on that front. So the headline news we have today basically is goods trade balance came in a little bit worse than expected, but the news for the whole day is right down through here. The FOMC is coming out and telling us what they're going to do, and then they're going to have a press conference, and this is where all the questions get answered right through here. So that's a big part of this. But this is an analyst that I follow, Diane Swank, and I followed her for years. I want to get their take a bit. I'm going to cut it about halfway short because it's a little lengthy, but they talk about tariffs and unemployment in specific areas. Now, this was recorded last night, so it's going to say, the Federal Reserve's meeting tomorrow, which is today, but I want to give you some insight here from Diane Swank. She's a great person to follow, so check her out. But let's see what they have to say.
Here with us at the table is Diane Swank, KPMG's chief economist. Diane, it's great to have you in-house, first of all. Welcome.
It's great to be here.
We should make this like a traveling show or something. I don't know. But for the time being and ahead of the Fed's move tomorrow, why do you think, last time around they ended up cutting rates by 2019, so tariffs were not that inflationary. Why do you think this could be different?
So, in 2019, there's actually a great Fed study on this. We saw that the price increases on the specific goods, not only washers went up in price, but dryers, because they were bought together. So there was a contagion effect. However, it was a different economy, and the increase in tariffs was a very narrow increase. The actual effective tariff rate, just a little blip up in the national tariff rate. They're talking about a much bigger breadth of tariffs, but we're against a backdrop. Context matters. We have embers of inflation are still burning. Mm-hmm. We've not yet beat inflation, and we have those longer supply chains, which were made in part to avert existing tariffs and to hedge against political risk, but that makes them more vulnerable to supply shocks and retaliation, and we're the 800-pound gorilla in the room. If we do tariffs, countries that retaliate are going to try to exactly hit those supply chains.
Hit us where, so there's that issue. I've also heard Steve people say last time around we got corporate tax cuts, then we got tariffs, so companies were able to absorb the tariff hit a little bit more, maybe not have to pass it along, but the sequencing could be different now. And this almost like psychological effect where now that we've seen costs passed along because of the pandemic, companies and consumers, we're a little bit more built to do that.
I actually call it the cultural dimension of inflation, which is back in 2019, you did not raise prices.
No.
Somebody came to you with a price hike, you said, go back and do your numbers again, okay? Because I am not going to go upstairs to Walmart and tell them 5% more. You go give me back 5% less. Now it's a little different. They've done that. The kind of dam has been broken on raising prices. And I think the trouble this time also is people have not forgotten the inflation they had just very recently. And so, I think I yelled at you yesterday and I said, the Fed is not going to make monetary policy on egg prices.
Right.
That's true.
No.
But put together eggs and a little bit higher on gasoline these days, a little bit higher on tariffs, and then they might become concerned about what happens to inflation expectations. And sorry for yelling at you.
Oh, no. I mean, then I had people all day sending me pictures of the egg shortages. I do think psychologically it's a big one right now. But the larger question, I'm glad that you two are here because I can ask it. Even if prices go up, is it inflationary or is it contractionary? So for instance, let's say Mexico-Canada tariffs, which we haven't experienced before, if those are fully passed along, they could raise CPI by a point, according to some estimates.
And slow growth.
Right, well, but that's my point. So
Stagflationary.
the only way that you get broad-based inflation is either from what? The Fed? I mean, I guess you could argue maybe fiscal. If we don't have an accommodative Fed, then those price hikes are just going to come out of the consumer pocket somewhere else, right? That's what I'm trying to figure out.
Yes, but I think there is this issue of, first of all, we see consumers saying, and this gets to the cultural issue and that we've not forgotten inflation, 67% of the labor force was born after 1982 or 1982 and beyond. They've never experienced inflation until we had this pandemic inflation, but now they do. And you see it in inflation expectations and the fact that they're willing to buy ahead of price hikes in a way that we did not see in 2019. Also in 2019, the damaging effect of tariffs on the manufacturing sector were quite acute. The Federal Reserve has a study of that. So in part, they could look through it as they studied it, the increases in tariffs, because they weren't broad-based and they were targeted, but also it triggered a manufacturing recession as well. So it did not.
I'm going to stop it there. You guys know how I feel about the manufacturing piece of this equation and the tariffs there. But what they're saying, it makes sense, is if you raise the prices on these things through the tariffs, what their comment was that then the consumer says, no, I'm going to cut back on my purchasing. So then could that help the inflationary numbers? So that's the conundrum, if that's a word, that we face right now. So let me give you my take on this. So I think the Federal Reserve is going to come out and they're not going to do anything. Their forward guidance is going to be addressing the tariffs, the labor market because of the immigration policies going on right now. Those are going to be the key points. We're not going to know anything until all that transpires. So if you want to wait, sit on the sidelines, we might get some repercussions, or the rates might get a little bit better or worse. My expectations for 2025 is rates are going to be about 6.5%. Okay, are you waiting on the sidelines to get wait till they get there? I don't know when they're going to get there. So that's one thing you got to be cautious about. So my expectations are the Federal Reserve's come out today and they're not going to do anything. Then they're going to give us that forward guidance. That forward guidance is either going to be a hawkish, which means they're going to say, well, we're going to just sit on the sidelines because we think there might be more inflation coming. Or is it going to be dovish, meaning they're going to be on the other side of the coin saying, well, if inflation, if tariffs aren't as big of a concern that we have, because Diane just said there's multiple studies showing it was kind of a blip in the radar, is it going to be really as bad as we think? And then are we going to be behind the curve and need to do multiple cuts? So that's why you have one camp on the side, there's going to be no cuts. Then you have a camp on the other side that says there are going to be multiple cuts. I'm in the middle. I'm saying that's going to take several months for everything to kind of the dust to settle. And then from there, it's going to be determined. It will be determined on how the inflation numbers go, and then how the employment numbers go because of the immigration things that's going on right now. So those are the things we're going to follow on a daily basis, along with oil and other things that are inflationary. That's why you need to focus in on my channel every day. So why would people choose me? What do I do? So I don't do videos for a living. You have a lot of YouTubers out there that's all they do. I actually do a video in the morning, a video in the evening. I do all the editing and everything else, but I'm a mortgage loan officer, licensed in all 50 states as well as Puerto Rico. So if you're out there anywhere in the country and you're like, Dan, I would really love your help, but do you have the programs? Do you have the rates that I need? Well, let me ask you this. Do you have the time to call 10 different banks, get quotes, work with 10 different loan officers, and then wiggle through that and determine which was best for you? Or can you let me take the heavy lifting from you? Because we're looking to partner with people each month and help you basically go from application to keys in your hand. And that's what we do. So now, do we have the programs and the rates? Well, actually, we do. So I'm also a mortgage broker, a large mortgage broker. And again, I'm licensed in all 50 states as well as Puerto Rico. So I have over 30 different lenders that we work with. So what we do is we get your loan approved, and then we start scanning the whole country. Who's got the lowest rates? Who's got the lowest fees? But the most important thing is we've got to make sure we get you approved first, because otherwise nothing else matters. And then also, when do you lock? Does the other loan officers do this on a daily basis? Do they know what's going on? So that's why a lot of people are choosing me. How do you reach out to me? Well, just go to therateupdate.com. Here's our website. Let me go to the top and show you where that is. So you're going to go to therateupdate.com, and here's my website. So there's going to be a few functions on how you can reach me. Okay, one is put in your application right up through there. You can do that. I'll get an alert. If you do that, all I ask you to do is give me a call once you're done. Okay, I'll have my information down below. We like to do those. We want to, you need to vet us because we want to partner together, okay? We want to take the application and work all the way through this with you. So how do you do that? Well, schedule a consultation with me, Alan, or David. You can do that right up there above. Or if you want to reach me personally, well, let's get over to it. I'm going to show you. Scroll down to the bottom of the website, and you're going to see our 800 number as well as my email address. So our 800 number is 844-775-5626, or you can reach me personally at dan@therateupdate.com. And please leave your question on there as well as your name and phone number. Love to call you, answer any questions that you have. And if you just have a comment you want to make, just please make that down below. I usually don't respond on those. It's hard to respond down there. But if you really need my assistance, please just email me. And I promise you I'll call you, email you back, and I'll get you taken care of. So thanks so much for watching, guys. We will have a special event today. We have Tony, who is a Instagram sensation. Every day he's out there either buying, selling, or rehabbing a property out in California. So join us then. And then we'll also be live during the Federal Reserve's conference, so I can explain some of the questions that they're going over, how that might be affecting the markets at the current moment. So that's our video for today, folks. Hope you enjoy it. Hope you learned a lot. Can't wait to see you back here later today with Tony to see what he's doing out in California. Thanks for watching, folks. God bless. Have a fantastic day. See you later. Bye-bye.